A few years ago, I used to be in the extremely irritating situation of having bills that would never stop piling up but no money to pay them off. If you have ever experienced this, you know how stressful and difficult it can be. The good news is that you can also get out of this circumstance. Over time, I was able to do so. Therefore, I'll be discussing with you all tips, methods, and strategies in today's video that you may utilize to escape this predicament and, perhaps, advance in your own personal finances. Remain tuned. Please subscribe to my channel and hit the like button before I continue, since it will improve the YouTube algorithm. Thank you. Let's get started immediately. Okay, so the list starts off with 1. Monitor your spending. This is probably something you've heard a million times already, but you'll hear it again today because it works and because you're most likely not already doing it. In essence, it must always be a priority. Ensure that every single dollar you spend is properly justified. The primary objective of cost tracking is to identify and eliminate wasteful spending patterns in your financial life. Continually keeping track of your expenses can also help you stay in control of your budget and promote better financial habits like saving and investing. Peter Drucker famously said, "If you can't measure it, you can't manage it." As a result, you should take the following actions to manage your spending. Analyze your spending categories first to see which are most important. You might even discover, as I did and perhaps as you do, that you have been paying for a membership that you aren't utilizing. The majority of individuals believe that reducing these non-essential expenses is a smart way to save money. Now that you can see where your money is going, you might also wish to choose cheaper hobbies. Additionally to saving money, you'll learn more about some of the subjects you read about. Therefore, doing this actually has little to lose. 2. Establish a budget. Before recently, I had no idea why the majority of individuals didn't have a budget. You see, the majority of individuals are concerned about having to do so much paperwork to create a budget. It is, in fact, a lot of work, but it is most definitely worthwhile. You see, you ought to approach budgeting differently. Consider the advantages and how much you stand to gain from it. Once you've established a rhythm, be sure to maintain it. This is the only approach I've discovered to be effective. So be careful not to lose your momentum. A budget that is created and then placed in a file or folder on your bookshelf or filing cabinet is completely useless. You can also use digital tools like software and apps to make this process much simpler by making sure you're always updating and reviewing it. You may find a ton of excellent free ones online by performing a brief search. 3. Set a cap on your unauthorized spending. Everyone is aware that making an impulsive purchase of something you hadn't planned can be joyful and emotionally fulfilling. The emotional high, though, can disappear fast, leaving you with hasty purchases you don't actually need or want. If this applies to you, you'll have to swallow the bitter pill and put an end to it. In actuality, it is the exact reverse of wise financial practices. Try following the 1% rule for spending the next time you are in the mall. This rule stipulates that you must wait a day before purchasing anything that costs more than 1% of your annual gross income. For example, if your yearly income is $60,000, you must wait a day before making a purchase that costs more than $600. This rule relates to discretionary spending on things you want but don't need, or, to put it another way, the internal struggle between do I really need this and do I want this? You can rethink your purchase within the 24-hour cooling off period. Why not give it a day more and decide if you really need it? You might not after 24 hours. So keep in mind what the guy from Practical Knowledge advised you to attempt the next time you go shopping. 4. Save money for major purchases. Imagine what you could see if you saw a gorgeous $4,000 commercial for a spectacular 90-inch flat-screen, 8K television. This does not mean that you should start dialing the number displayed on the screen as soon as you pick up your phone and credit card. That is a terrible concept. Do you still recall the 24-hour rule that the person from Practical Wisdom taught you about? Recall that? Therefore, according to experts, it is advisable to use the funds from your savings account designated for such purchases if you truly want that large TV. Avoid taking out a credit card loan unless you have a solid repayment strategy in place, which 99% of individuals don't. Additionally, there are a ton of benefits to saving for a significant or pricey purchase. If you save up and pay cash, you might be able to negotiate a lower price or, at the very least, better financing terms. The cost can decrease as well. Additionally, if you're making a larger purchase, acquiring a loan might make more sense, especially if you're buying a home or another property with growing value, or if you're trying to avoid withdrawing funds from your savings or investment account. 5. Examine financial literature. The adage "write it down if you want to hide something" is accurate. Unfortunately, the majority of individuals never bothered to read. You see, if individuals bothered to read some of the things they often chose to disregard, like the knowledge found in books, they would likely find success. Learning is a lifelong process that makes your talents more refined the more you do it. The main benefit of financial literacy is having the capacity to make sensible financial decisions. It equips us with the knowledge and skills necessary for effective money management, including budgeting, saving, borrowing, and investing. 6. Reduce your recurring bill. One of the simplest methods to take charge of your finances is to reduce your monthly spending. While you might not be able to reduce some fixed expenses, such as rent or car payments, without making substantial lifestyle adjustments, you can reduce other variable expenses, such as clothing or entertainment, by being flexible and frugal. You may, for example, use less energy, choose a new life or home insurance provider, or shop for your groceries at bulk discounts to start saving on things like your energy expenses. Furthermore, you shouldn't just accept a loan because your income and credit qualify you for one. Many people think that if they apply for a credit card or loan that they cannot afford, the bank will not approve them. However, the bank only knows about the income you have revealed and the debts that are shown on your credit report. It is not aware of any other obligations that would make it impossible for you to make payments on time. You must therefore decide whether a monthly payment is feasible for you based on your salary and other monthly obligations. 7. Eat in your house. The expense of cooking and eating meals at home may be relatively low. Simply cut back on your dependency on takeaway. The occasional splurge at a posh restaurant is acceptable, but you might save money by starting to cook at home or by bringing your lunch to work rather than eating out every day. It might be straightforward to do if you prepare a weekly dietary plan. The following week's meals should be planned and then followed. The internet offers a seemingly endless variety of culinary and recipe instruction, even for individuals who don't consider themselves to be cooks. Make at least one meal every week at home to start. Starting the following week, bring your lunch to work. The amount of money you can truly save could astound you. 8. Repay your debts. One of the most expensive mistakes you can make is carrying a lot of debt, especially on high-interest credit cards. Pay off your debt as quickly as you can to improve your financial status and create new financial prospects. If you tend to forget things, you should establish a list of all your current bills, including credit card debt, student loan debt, and car loans, and figure out the minimum payments you need to make on each one in order to stay current. Consider your fixed expenses and how much of your discretionary spending budget you can set aside for debt repayment, because making minimal payments won't get you out of debt any faster. Additionally, you can attempt to reduce the interest rate on the debt by asking the issuer for a lower rate, combining many loans into one, or transferring high-interest debt to a credit card with a reduced interest rate, like a balance transfer card, to reduce the overall interest rate. Then, to pay off the debt as quickly as possible, build sensible spending habits and a debt payback strategy. The more quickly you pay off your debt, the bigger your monthly budget will be. As I've said before, paying off credit card debt needs to come first. It rises over time and is challenging to reduce, unlike your car or house payment. I sincerely hope this was useful to you. By simply following the instructions in this video, you may now always be one step ahead of your financial situation. Think about the likelihood that you have never experienced a money issue. Simply put, you will now have more money. Please feel free to ask any questions in the comments section below. With that said, I want to thank you all for watching, wish you all the best, and look forward to seeing you in the upcoming video. Subscribe.